Bitcoin price simmers. Here's what needs to happen before it can boil. Hey guys, it's Keith Allen. It's been a few days. I've been around. You've seen me on some stuff. Thanks, by the way, to Cointelegraph for all the shouts and coverage. Appreciate that. And thanks to Blockchain Banter for this week's show. We had a good one. And of course, looking forward to climbing into the charts with you guys. As a reminder, live chat is open. Would love to have you engage with me. I always enjoy talking to you guys. I want to hear your questions. More importantly, I also want to hear your insights, right? So we're all sharing here and learning together. And glad to have you with me as usual. If you have not done so yet, or if you're new to the channel, do me a favor, smash all the buttons, help me grow the channel. You know how that works. And most importantly, make sure you subscribe. Hit that little, tick the little bell up top there, and make sure you subscribe so you don't miss any of the future streams. I try to do these consistently, like around the same time, but quite frankly, life just isn't working that way for me. So you get them when I got the time to do them. And I always try and make time for you guys every week and get several of these out for you during the week. So what's happening these days in the charts and in the order book? That's what we're going to look at. We're going to talk about where the technical resistance and technical support are in the candle charts. And then we're going to lay that up against the order book and see where the bids and the ask liquidity are correlated are resting in the chart, at least where the concentrations of them are, and how that may or may not correlate with what we're seeing in technical resistance and support in the charts. So to start, I guess the candle chart is the place to start, and I will share that one here with my trading view chart and look at the Bitcoin daily chart here for starters here, which shows that we're actually support testing this prior range. This is significant, right? It's significant and important because we did have multiple support tests down at the macro trend line. Okay, and if you're wondering where that comes from, that trend line dates all the way back to September of 2023. Okay, so this is a pretty solid trend here. It's a little bit distorted with all the trend precognition signals, but before I turn that off, it's worth noting that we do have a downward signal here. Didn't mean to do that. We do have a downward signal here, which indicates that we're not going to make a new high today. This could certainly be invalidated. We've seen things like that happen, and we have this entity in the game that we've dubbed Spoofy the Whale that might manipulate things that could change that outcome. This signal is, of course, tentative until candle close today, but it seems like it's pretty solid at the moment. We are finding some support here at this prior consolidation range. Now, if you're not familiar with how this range was formed, and I am going to now turn off trend precognition so that we can see this a little bit more clearly. This range was established and barely established on this on the Trump pump from the November 5th election. As we started seeing these big giant celery sticks, I was looking for support, because if you've listened to me for any length of time, you know that I believe that straight lines are not sustainable, and we always need to find those opportunities and those levels that price can consolidate, so that if and when we do get retracement, or even if we flip to a bear market, there's got to be some friction in the chart for price to land on. And so we had a very brief consolidation here at this 76K level on the way up. And then we had another brief consolidation at this 86.5-ish level. And then we flipped that pretty quickly, right? So we had a little consolidation here. We flipped it, and we're up above 91.5, 91.6 for quite some time. It looked like a pretty solid RS flip, and still we started poking holes in it here. And after I guess that would be we had several support tests, but finally things broke down. Death crosses amongst the key moving averages. Things broke down, and as you can see, we have another death cross here recently between the 21-day and 200-day SMA. That's the simple moving average. It's one that I like to use. It's not the one that everybody uses. And notably, we have a bit of a divergence between the EMAs and the SMAs. And I'll turn on the EMAs here, and we can see that we did have actually a golden cross between the green 21 and the purple 200-day moving average. But I think that's short-lived, right? So ultimately, we do want to see these golden cross and start to unwind these death crosses from above, and that will happen in due time. But in the meantime, there is a heap of technical resistance between the 50 and I would say both moving averages. You could work anywhere in this range uh, between the 50-day and the 21 and 200, which are all closely aligned here, right? So technical support really between this, um, really around this 85K level, and you know the 21 day is down at 84.5. That's close enough, but the trend line is pretty close to that, right? At 82.6 right now. Um, so all of this really forms strong technical support, in my opinion, and all of this forms strong technical resistance. The key spot in here for me is the 2025 Open. I posted something weeks ago, or not weeks ago. I posted something. Well, it's been kind of an ongoing discussion here about what was happening with an entity that I call Spoofy the Whale. I've shown you that in the order book a couple of times on fire charts. You can see this guy has been this entity has been moving ask liquidity lower, then higher, then lower, then higher to not chase price, but to herd liquidity and herd price downward. And then draw it back upwards, possibly to get filled, possibly to protect shorts, possibly to get filled on longs down here, and then let it come up and breathe, take some profit, knock it down again, et cetera, et cetera. So as you can see, Spoofy has raised their bids, raised their asks higher once again. And that happened back on the 20th. We saw that move. And so you've been getting some pretty good publicity out of this from our friends over at Cointelegraph, and I'm appreciative of that. Since those things have happened, we have seen some changes, right? So there were two articles recently, one talking about me, about the yearly open and looking for those dips to retest lows, and that's where I'll be looking to buy. And I've had a couple of questions in my Telegram today asking me where I might consider doing that, and so I'll show you what I'm thinking on the charts. For me, it is, I should note that I've been building my long-term position, and there's two strategies that I employ. One is my trading strategy where I scalp in low time frames, and the other one is, hey, I want to own and I want to accumulate and own some Bitcoin for the long haul. So in my investment strategy, I take a dollar cost averaging approach. I've been doing this since the FTX crash back in 2022, took us down to 15.5, and I have built a long-term position by dollar cost averaging my way, buying at all these consolidation levels that we've been at. I hold, some coin from each level. Do I wish I held more from 15K? Yes, of course I do. But it is what it is. As it stands, my dollar cost average entry price is still quite good, sub 50K, to be honest. So I like where we're at right now, but I want more. And so I'm looking really anywhere in this range. If we get a support test down to the 21, I do have a small order that would buy that. If we have a test down to the trend line, I have a slightly larger order that will buy that. Same down to this 75, 76K range, which has some importance to me. There was a brief consolidation here, but this also correlates well with where the RSI sits on the weekly RSI. And if by any stretch of the imagination we get that test all the way down to that 2021 open, I will add a significantly amount more down at this level. But I'll do that when we see buying resume, because this would be, breaking the trend line is where the risk really increases here, because you want to see buying resume before you ape into something, right? So keep that in mind. To the upside now, where do I see resistance? Obviously, all these levels here, but like I said, this one is the most important to me. Once we flip this, we could see some price appreciation, and we have actually a new indicator that we've been working on over at in the secret lab at Material Indicators that my partner Fred has been working on. And let's see if I have that one actually open to share with you guys and show you what we can see on timescapes. All right, so here's that yearly open, and it is currently strong resistance. So we've had some rejections here. It served as support for a while, and now it's been rejected. So until we reclaim this, Spoofy has moved those asks way higher. But until we can reclaim that 93.3, 93.5-ish level where the yearly open is, this won't matter. Now, interestingly, we don't see a lot of ask liquidity in that range of the yearly open. That could certainly change between now and then, and we'll often see the order book kind of dynamically shift as price moves, and we see those things come into play. But we do have some support in this area. That was the bottom of this range that we're in now, and we also have a heavier support down at that 75, 76K level. So if this breaks through, the trend line is somewhere around here. Trend line currently is sitting at 82.7-ish, right? 82, 83 range. And the 21-day moving average is around we're around the 85 range. And of course, we're finding some local support right here at the moment at the 86.5 range. So this all looks interesting to me, as I said. In terms of where the liquidity is, let's look at that again a little bit closer, right? We've got a little bit here in this 85 range that we're holding right now. If we go below that, the 80 range holds some bid liquidity. Would I say the trend line was 82.6? Yeah. So, above that 82.5, and we'll round and make it easy. So what do we see there? We see a ladder of bid liquidity up into this range. It's not huge though, right? So there's not a ton here. It will be pretty easy to break through this and come down lower. So if we do indeed break that trend line, because there's not a lot of liquidity here, and I'm going to boost this a little bit to make it a little easier to see. Right. So we have this ladder that I guess I would say extends to 83. This may insulate. It might be enough, but I would have more confidence if I saw more blocks of bid liquidity either floating up higher from down here or just new bid liquidity coming into the range above 80K to hold us above that trend line. If we lose the trend line and 80 doesn't hold, I think there's a chance that we could come into the 75, 76K range. I think that could come into focus pretty quickly. So I don't know that it'll go all the way down to 75. I think that level will hold, but we could see a wick down to this range. Keep that in mind before you ape in, right? And then to the upside, we can see that we have significant ask liquidity kind of holding things down at the, up at that 90K level, more at the 91, we'll call it 92 level, and up to 95, et cetera, right? So we've got to 93.3 is where that annual open is. So we've got a bit of ask liquidity to get through before that can happen. If we can do that, and then it's level by level, range by range. If we could do that, then this 100-day moving average sits slightly above it at currently at 94.5-ish. So again, it's level by level, range by range. We've got to clear these hurdles. Ultimately, once we flip this, then we can talk about going back to all-time high territory. I think what needs to happen, consolidation here is good. Consolidation above here is good, especially above this 2025 open. And we didn't have a really an abundance of consolidation above 100K. So I'd like to see more consolidation above here before we break the all-time high and things really go off, take off to the races, so that simmer can get to a boil, as it were. Sebster joining me in the live chat. Glad to have you back, man. He's asking to hear my thoughts on Solana and ETH. Okay, well, let's start with ETH. I have not even looked at an ETH chart today, but I'll look at one now. We'll do this live and in the fire, right? So ETH looks like it has suffered another slide. We see another trend precognition downward signal here. This is a daily, so take that for what it's worth. On the daily time frame, back-to-back signals make that strong. Even stronger than a single signal alone. This is I've got two algos working here for trend precognition. This is the A2 plus algo with the arrows, and the dots down below are the A1 algo. And this A1 slope line, this orange line here, is showing us the downward momentum. This slope line changes in real time, so it's all correlated well. I do like, the weakness is that it lost the 0.5 fib again. The strength is that it, for the moment, is holding the 21-day moving average. Can that continue? So look for this right here to hold. If it doesn't, then we know what that means. We know we have a little bit of support down here at the 1850 level. But seriously, if things really break down for ETH even more, then I'm looking down to the 1500 level has been good historically, at least for a long time, and but ultimately, if the bottom drops out, I'm looking in the 2018 top range at 1389. Let's see what the weekly looks like. See if I've got anything different here on the weekly time frame. So the weekly looks a little bit better in terms of momentum, but it has faded a bit, right? So on the weekly, I still want to see it flip this 0.5 fib and to reclaim this and climb back up, right? Clear double top here. All in all, ETH has not been strong this year at all. Solana is another one. That's a coin I have interest in. And interestingly, I'm glad that you actually brought up an alt here, Sebster, because we can see that alts are actually gaining a little bit of traction here, right? So Bitcoin kind of consolidating in this range, in this price range, USDT dominance starting to fade, and total 3 starting to climb. If you're not familiar with what total 3 is all crypto assets minus Bitcoin and ETH. So this would point to certainly not, we're certainly nowhere close to an alt season, but you look for these divergences between divergence between total 3 and Bitcoin dominance to start to equate to a reduction in USDT dominance to get us to an alt season. So those things, appear to be potentially developing. We're at least seeing the signs of something moving in the right direction for that. Long way from calling this an alt season, though. So don't misinterpret what I'm saying. Okay. What I am saying, this is not yet considered an alt season, but there are some opportunities with alts. And I would suggest that you focus on the alts that are quality, if you can find some. Okay. Solana would be one that, we could argue is quality or not. There's certainly lots of opposing views on that. I happen to think that Solana may have some merit to it, and so it's one that I'm interested in. And in terms of what Solana is doing, it was pumping the past couple of days on news of, I believe, ETFs. We know how that works, though, right? It becomes a buy the rumor, sell the news event at times, but ultimately it should resolve itself to the upside over time. What Solana has done here in the past few days is impressive, right? We've RS flipped some prior consolidation levels, as you can see. This brown box here, which this is probably going back a ways. It does. Okay. So we've RS flipped the 0.5 fib. This super important because it puts us in this golden, the golden pocket, if you will. And this is, this is macro level stuff here. So what I want to see happen is I want to see support obviously hold above this level. It retested the 21-day moving average. Let's see what the weeklies look like, see if it's any different there. The weekly also looking like we have an RS flip here, right? And we have upward momentum. So this looks good to me in the short term. To really develop into something that takes us back to the hopes and dreams that we have for Solana, we have to flip this trend line, okay, which is closely correlated to the 0.618 fib and the 50-week moving average. So, ultimately, we got to get back above that 21-week moving average to really get off to the races, and that's relatively correlated with the 0.786 fib, as you can see right here. So a lot of technical resistance up above for Solana, but clearing some key levels of support here. If this 0.5 fib holds, I like it. If not, if you picked up some Solana in this range, if it loses this trend line, which is pretty well correlated with the 100-week moving average, I would be prepared to see a bigger drop, potentially down to the 200 here, and that's sub $100 Solana, I might add. So hope that gives you an overview of what I'm looking at and what needs to happen for these assets to really appreciate and get back to the bull run that we've all been waiting for. And I think it will happen in due time. We've had some alleviation of the tariff talk, at least for the moment. And so that has given the market a little bit of a reason to rally. Hey, my pleasure, Sebster. Appreciate it. We had, in the past week, we've had the Trump administration talk about potentially using gold reserves to buy Bitcoin, which I think is actually not a bad idea, especially considering the fact that gold is trading in all-time high ranges and Bitcoin is in a correction. We've also had, and I think this is what the market really responded to the most, is the Trump administration saying that there will be some flexibility on tariffs. So, we have a looming August 2nd date coming up on tariffs. And something else that we have happening, not August 2nd, April 2nd on tariffs. And something else we have happening in April is taxes are due, right? Personal taxes are due. So that's the deadline for, how should I say, any profit taking or tax loss harvesting that traders and investors may want to do before they file their income tax. Yes, most people do work off of the fiscal, off of the calendar year, but there are some ways to apply what happens before the tax deadline. So we could have some volatility between now and mid-April for sure, in my opinion. I'll leave you with a parting shot of the order book, I guess, and we can see. So notice we do have a little bit of support here, but let's drill into the daily to see how that is being met with order flow. And if you look at the binge CVD, and this is super important, right? It's not just about identifying where the liquidity is and where that support might be. It's noticing when buying resumes. And you are not seeing any significant buying out of the whale classes at this point. So I would be reluctant to buy in this range until we see a bigger dip. Maybe we would see some buying at 85K. If that happens, I'm good with that. If it doesn't happen, then we have to we got to look lower, and from there it's to the trend line, in my opinion, and I want to see more bid liquidity show up here to protect that. I'll leave you with a parting shot, a wide one to see again. Look, this is really quite simple. This illustrates it beautifully. The the side with the brighter spots wins this battle every time. Okay, so as you can see, the ask side has a lot more volume and a lot more strength than the bid side does, and for a long way. So this I filtered out some of the lower volume so that we can see the important levels, right? There is volume here, right? For sure. But to see where it's really concentrated, I'm going to apply that volume filter here in fire charts, and you can see that yeah, there's a little friction here, but it doesn't get heavy until we get to that 76K range. All right. Keep that in mind. We're going to look for buying here out of these whales before we ape into anything. All right. We don't ape. We make strategic decisions, and this is going to mitigate a lot of risk, right? Part of this market is not just making money every trade. It's not losing your money. It's not losing the value, your net worth or the value of your portfolio, right? Protect yourself, wait for those confirmations, and you're going to thrive in this market. Hope that helps you out, guys. I appreciate the support as always. If you haven't done so, smash all the buttons and help me grow this dang thing. And if you have not joined our Telegram community, I invite you to do that. That's where all the magic happens. That's where we discuss these things in depth. That's where we release the alpha before I share it with the general public here on YouTube and X. So I hope you guys will join us there. You'll find links to the Telegram community and all the products in the description of the video, and also at the top of the Material Indicators profile page on X. All right, guys, have a fantastic day. Make it a great week. And as always, trade smart, my friends.